How to retire on Tesla stock by 2030. How many shares do you need? Okay guys, so in this video we're going to do something a little bit different. So we're going to be looking at retirement goals. Okay, I've seen a lot of people talking about this topic, and a lot of people are kind of giving their opinion on how many shares of Tesla you will need to retire by 2030. So assuming some of you guys out there in your 20s, in your 30s, 40s, 50s, maybe even in your 60s and above, okay, and you're working, you're grinding out there in your 9 to 5, or you have your own small business, or you're freelancing, doing whatever, or maybe you're still in school and you're thinking, hey, I would like to stop working by the end of the decade. I would like to spend more time on my hobbies, with my family, with my kids, traveling, doing whatever you want to do. So in this video, I'm going to give you guys a straightforward step-by-step blueprint on how you can do that simply on Tesla stock. So whenever I talk to people, I talk to lots of people about investing, not just online, but offline as well. And I know a lot of people are invested in index funds and ETFs and things like that. And that's simply fine. But the problem with that is that you're giving up ownership. Okay. So, what the rich elites want us to do is they want us to give up ownership of everything. And that's exactly what you're doing when you're investing in index funds and ETFs. You don't own the underlying companies. What you're really doing is you're giving your money to an investment management firm, or someone like Kathy Wood at ARK Invest, and then they take your money and they own the stocks. So what ends up happening is that these index fund companies, these ETF companies, they end up owning the companies, and you don't really own anything. You kind of own like a derivative. So a lot of people are wondering, like, oh, which stock should I invest in? And I give people Tesla, because Tesla is like the safest, most no-brainer stock out there that is basically has a lot of room to run throughout the rest of this decade heading into 2030. And it's just had ridiculous historical performance, and it continues to produce good products time and time again. Now, obviously, it does have a lot of flaws. The company's not perfect. And of course, we all know Elon Musk is a bit eccentric, and he's brilliant, but he can be unpredictable, like with this whole bid to take over Twitter. But that's besides the fact. Tesla is solving a massive, massive problem when it comes to clean energy, sustainable energy, climate change, is checking off all those boxes. So for me, this is the safest play for your retirement. Now, of course, there is some risk. Something could happen to Elon Musk. He could pass away unexpectedly. He could step down as CEO. So there are, or Tesla itself could lose its brand recognition. They could get too spread out on too many different projects and just kind of lose focus. Elon Musk could lose focus. Maybe he's dealing with Twitter. He's dealing with SpaceX. He's dealing with Boring Company. He's dealing with all these different things, and he just loses kind of sight of the prize. But all in all, if Tesla continues doing what they've been doing, that they're probably the safest play for your retirement. So this video, we're going to talk about exactly how many shares you need, how much money you need to invest, etc. So first off, I want to start this video. I want to give you guys a historical reference on Tesla stock. Over the last 5 years, Tesla stock is almost up 1,000%. So if we were to compare that with some of you guys out there that are investing, in things like the S&P 500 ETF or something like that. If we take a look at, for instance, we take a look at the SPY. So the SPY is like the ETF for the S&P 500, and we can kind of compare the returns. So over the last 5 years, okay, Tesla's done almost 1,000%, and the S&P 500 has done 63%. So this is why I tell people, yeah, obviously it's I understand you want to be diversified and be safe with index funds, ETFs, but you're giving up a lot of gains. And this is basically forcing you to have to work longer, because you're investing in assets that are basically compounding much slower. So that's kind of my, and then we can also look at the NASDAQ as well. Okay, we can even look at the NASDAQ. So if we type in QQQ, okay, we take a look at the NASDAQ, we're going to see a similar story here. So over the last 5 years, the NASDAQ's up 100%, S&P 500 63%, Tesla 1,000%. And this is just the beginning of Tesla, okay? A lot of these numbers kind of, obviously, they diverged during the pandemic, but the pandemic was already over 2 years ago, so things have changed. People realize the value of electric vehicles and things like that, and Tesla is still the leader. Now, I do believe some other companies could come out there and take market share, but Tesla seems pretty focused on delivering results, and we can take a look at this by their deliveries. So Tesla, the reason why the company is so valuable is because they continuously are producing EV vehicles. This company is a action first, production first company. So if we take a look at the deliveries, we can see that basically they've been going up every year since 2012. Okay, every year Tesla has continued to deliver more EVs, and of course this is translated in much higher stock prices. So this isn't rocket science here. Okay, obviously Tesla is doing very well with their financials. They're profitable now. Okay, their revenue soaring and things like that. But I want to make this video as easy to understand, even if you're a complete beginner and you haven't invested in the stock market. We're not going to go into in-depth financials and things like that. We're going to keep things very simple. We're basically going to extrapolate more deliveries, more production, more revenue, higher stock prices. So now what I want to say is, okay, so where could Tesla stock be trading in 2030? Well, to do this, I've done something very simple. I use a compounded annual growth rate, okay, the CAGR. So if you guys aren't familiar with that, it's basically a metric that shows how much a stock or any equity is returning annually over a long period of time. So if we take a look at Tesla, guys, now you can find this information over at Morningstar, and then you can type in any type of stock or whatever you guys are following, ETF, whatever, and then you type in, you go to trailing returns. So it will show you the returns of a stock over a long period of time. So if we take a look here at Tesla, we can see Tesla is down 27% year to date. The compounded annual growth over the last year is 34%. Over the last 3 years, 156%. Over the last 5 years, it's 63%. Over the last 10 years, it's 61%. So that means since 2012, Tesla stock has been going up on average 61% every year. That's in comparison with the overall EV industry of 16% and the overall underlying index, which would be the NASDAQ, which is 13%, guys. So what I did was I simply took that growth rate, I threw it into a calculator. Okay, I didn't even use 61%, I just used 60%. So what I did was I entered in Tesla stock price. Now, if these gains remain the same, we could see Tesla stock over the next years moving at similar prices. So that means in 2023, we'll be at $1,155, 2024, $1,848, 2025, just under $3,000, $2,957, 2026, $4,731, 2027, $7,570, 2028, over 12 by 2028. If these returns continue and Tesla keeps pushing out vehicles, and remember, Elon Musk has a goal to have 20 million annual deliveries by 2030. So 2028, Tesla stock could trade at over $12,000, $12,113. 2029, $19,381 a share. And finally, to end off the decade, it's possible that Tesla stock could trade over $30,000, assuming there's no more splits or anything like that. Okay, now this would put the company's market cap at a massive, a massive $31 trillion market cap. And my guess is Tesla would probably be the most valuable company in the entire world. But they are solving the biggest problem in the world, which is climate change. Okay, it's bigger than anything else we're dealing with. There's a lot of problems. We're not going to go into those in depth. That's for another video. But it is possible that Tesla could be at $31,000 a share by 2030. So that would give you guys a massive return on your money. Okay, we're looking at like a 40x on your current money. So how do we get there? So how many shares are you going to need? Well, the first thing we're going to look at is we're going to go over to annuity.org, and we're going to take a look at the average retirement income, okay? So the average retirement income according to the U.S. Census Bureau. Now, obviously, this is for people living in the United States. If you live overseas, depending on where you live, you guys live in Europe, you'll probably need something similar to the number in U.S. dollars. You guys live overseas where the cost of living is much cheaper, like in Asia, Africa, Latin America, or somewhere like that. You don't need as much money. So this number is specifically for Americans that are grinding, but you can also change this, adjust this based on to where you guys are especially living. So if we take a look here, so the median average retirement income is around $47,000. And the mean is $73,000. So what we're going to need to do is we're going to have to adjust this a bit for inflation, okay? Because in 2030, obviously, the dollar is going to be worth less. So let's say you're going to need about, if on median it's like $47,000, let's say you're going to need like, inflation is slowing a bit, but recently it was at like over 8%, right? I'm back in the CPI data. So let's say you're going to need 50,000. Okay. Obviously, a lot of you guys will need more than that depending on where you live, but you can always, once you have your money, you can always move to a cheaper city. If you guys live in like New York, you can move to New Jersey. If you live in California, you can move to Vegas. Okay, you know, if you live in like Washington, D.C., you could move down to Charlotte, North Carolina, somewhere like that. You could move to Georgia, Florida. So you can always take your money and move to a cheaper place. For example, places like Florida, Vegas, Texas, there's no income tax. So a lot of people like moving there during their retirement because they save a ton of money depending on where you guys live in the United States. If you live there, you could be paying up to 10%, even more, in just state income tax. So basically, just by moving to a state without income tax, you could be saving like $5,000-$6,000 a year, which is a ton of money if you're retired and you don't want to work anymore. So let's say you need $50,000, probably need more than that, but you guys can move around, or you could consider moving overseas. Okay, a lot of retirees are moving to places like Portugal, Costa Rica, Panama. Okay, places in Africa, Southeast Asia, Thailand, Philippines, right? Places where the cost of living is much lower. So you can always do that, of course, and that will really make your money last longer. But let's say you guys want to just stay in America and either want to stay where you are, or you just want to move to a cheaper place, like I mentioned before, Florida, Vegas, Texas, something like that. So you need $50,000 a year, okay? Now, let's say you're using an annual withdrawal rate of 5%, right? So you're taking 5% of your money every year, and you're basically spending it to, you know, fund your lifestyle, okay? So if we take a look at this article on Yahoo Finance, it basically says that you need to save a ton of your money. So the first thing you need to be focused on is, before we talk about how many shares you're going to need, you need to making the habit of saving your money. Okay. This article says save like 70-80%. You'll need 70-80% of your pre-retirement income. You know, obviously you can move. Okay. You don't necessarily need to have all of your income, because you can just simply move somewhere cheaper. Okay. There's places overseas where you can live in, like Costa Rica. You could live in Portugal, and you're going to be, you know, trying really hard just to spend $1,000, $2,000 a month. So definitely take a look at some of these cheaper retirement places if you feel like your income's going to drop a lot. But let's say you want to have like a similar lifestyle, very similar lifestyle that you had when you were working. Okay, well, this is really simple. What you have to do, the first thing you have to do is you have to have an aggressive savings rate. And the easiest way to do that, okay, as you see here in the article, they give you many different reasons. You guys can put money into a Roth IRA. That's like an annual contribution limit of like $6,000 a year. Okay, if you guys invest in a 401k through your company, if you guys are working a 9-to-5 grind, you can put around $19,500. If you guys are like self-employed, working with a SEP IRA, like me, I'm self-employed. You know, you can do up to $13,500. So that's kind of the easiest way. So put money in those accounts, and then you know, we're going to talk about how many shares of Tesla you'll need to buy. But you want to get the habit of putting money away now. So don't wait. Okay. A lot of these accounts, you will have to pay some penalties, but there are ways to work around that. We're going to talk a little bit about that at the end of the video. But basically, you want to start the habit of putting your money away in these retirement accounts now. Okay. The second thing you can do, of course, is you're going to have to be realistic about your savings rate. So you know you need to save money. The second thing is you need to be realistic about your savings rate. You're going to need, depending on how much money you guys make, you're going to need money to buy stocks. So you're going to have to cut out a lot of frivolous expenses, right? Things like alcohol, partying, you know, gambling. If you guys are into things like marijuana and stuff like that, get rid of things, you know, toxic relationships where you're spending all your money. Anything that's basically causing you to, you know, live paycheck to paycheck. You're going to need money to buy Tesla stock. Okay. So now we've gotten that out of the way. You know which accounts to fund. You know you need to save money. A good savings rate would, if you guys can do it, try to save at least 10% of your income. The more the better. Obviously, there's different subreddits you guys can go to if you guys want to check out. I think they mentioned those in the article. Yeah, they have two subreddits. They have Lean Fire and Fat Fire. I'll put some links to those in the description below. You guys can help get your savings rate up. Me personally, my savings rate is somewhere between 30 to 50%. But like I said, you know, I live alone. I don't spend a lot of money. I just basically buy food and pay rent. And then the rest of my money goes into Bitcoin and stocks and growth stocks. So you could say I have a pretty boring lifestyle. But if you guys live in a very high cost of living city, you guys have kids and things like that, a wife or a spouse or a lot of other, responsibilities, student loan debts, it's going to be harder. But make sure you're doing at least 10%. There's a really great book that talks about this called The Richest Man in Babylon. Make sure you want to pick that book up. It'll really give you guys some kind of inspiration to save at least 10%. So now let's get into it, guys. How many Tesla shares you're going to need? So this is very simple, guys. We're just going to do a little bit of math, okay? Okay, so here we are at Google Calculator. So as I mentioned earlier, my price target for Tesla stock is around $31,000 by 2030. But this is obviously just an estimation. So let's for ease of use, let's put the stock price at $30,000 per share, okay? So now, if you're going to be withdrawing 5% of your money every year, that means you're going to need $50,000, right? So how many shares are you going to need? Well, if you're going to be basically withdrawing 5% of your money per year, you're probably going to need to retire super comfortably anywhere. Now, obviously, guys, you guys can retire in different countries and cheaper states, but let's say you want to retire with a lot of dignity, meaning you don't want to drop in your lifestyle. You want to live life to the fullest, enjoy yourself. Let's say you're going to need $1 million. And guys, this is doable, okay? The stock market and crypto, these two venues will allow you to grow your money exponentially. If you guys aren't invested, watch channels like mine, watch other people on YouTube, read the Wall Street Journal, read books, get interested in this because this is going to help you retire faster. If you don't invest your money, unless you are making so much money at your job and you're able to just stack away cash, but cash is going to lose its value, you're probably going to have to work until you're 65 or 70. So if you want to retire by 2030, if you want to do things differently, you're going to have to do the things differently than most people. So you're probably going to, at a 5% withdrawal rate, okay, you're going to need $50,000. So $1 million, you guys can set a goal that in the next 8 years you accumulate at least $1 million. You can withdraw 5% of your money every year. That'll give you 50 G's to live off of. And of course, remember, Tesla stock is going to keep compounding. So you can easily either sell call options to generate income or just slowly sell some of your shares. And then that'll give you the money you need to enjoy your life, where the remaining shares should still be going up over the long term. So you won't really run out of money, okay, unless you spend too much in your retirement. So if we do that simply, we can see that $1 million divided by 30,000 is around 33 shares of Tesla. So guys, you will probably need, so if you take a look at the current stock price, $7.22, it's according to this calculation, you'll probably need to invest 24,000, let's round it off, around $25,000 invested in Tesla stock now. If things go the way they look like they're going, that will allow you to retire by the end of this decade with around $1 million. Now, obviously, there are risks. Like I mentioned, the risk before, Elon Musk stepping down, him passing away prematurely, Tesla losing its focus, Musk getting distracted by too many projects, too many competitors. So there's lots of risk factors. But Tesla has been doing quite well over the long term. 61% returns is unheard of, guys. I've never seen a stock ever compound as much as Tesla has. So we're talking about a once-in-a-lifetime company when it comes to investing your money, guys. So let's say you need to invest around $25,000 now to be able to have $1 million in the next 8 years so that you can retire with dignity. You're a millionaire. You can step back from your work. And I know a lot of you guys out there are really talented. You probably won't stop working altogether. You might just transition. So maybe you could spend more time working on your hobbies, use your hobby, turn your hobby into a way to make money, or you just want to get off the grid. You want to just, move to a cheaper state in America, move overseas, sit on the beach, whatever. But right now it looks like a $25,000 investment will get you guys there. That's assuming you don't add any more money. Now, if you wanted to break this up, obviously you could break this down into, like, let's say you put $1,000 into Tesla stock, and then you'll be able to get that investment over like the next 2 years or so. So there's many creative ways you're going to do this, but according to my calculations, you're probably going to need at least 33 shares of Tesla. Now, the more the better. If you guys can get 50 shares, 100 shares would be even better because you can sell covered calls. But 100 shares is going to be, okay, it's going to be a lot more money, obviously, because Tesla's stock price is way more expensive. So maybe you guys don't have $72,000 to invest. But what I would say is start learning about dollar cost averaging. Set up those retirement accounts, okay? You guys could also set up an individual brokerage account as well, but make sure you're opening those accounts, you're putting money into those accounts, you're buying Tesla stock, and you're trying to get as many shares as possible. If you can hit 33 shares, you're pretty much good. Obviously, if you hit 66 shares, you'll have 2 million according to these calculations. If you get 100 shares, if you get 100 shares of Tesla, and Tesla is worth, let's say $30,000. By the end of the decade, you're going to be sitting on a $3 million nest egg, with the 5% withdrawal rate. I mean, you're gonna have a pretty amazing lifestyle. You're gonna have like $150,000 to burn every year in your retirement. So that's it, guys. I hope you guys enjoyed this video. This was a really kind of interesting one that I wanted to make. But like I said, I stand by it. Tesla's still my #1 recommendation. It really solves the problem that's going on in our world, and Tesla's going to made a lot of millionaires last decade. It's going to make more, guys. I don't see anything slowing this company down right now. Of course, things can change quickly, but I think it's a good investment. Now, I wouldn't go all into Tesla, but Tesla is definitely one of the stronger stocks you guys can hold in your retirement accounts and kind of hold in your individual accounts if you guys want to retire by 2030. So that's all I got, guys. Hope you guys enjoyed this video. If you guys have any comments or questions, please leave in the description below. And give me, obviously, guys, subscribe to this channel if you guys enjoy this content. I'll be making more how to retire on stock videos, because it's really interesting to me that people can literally retire within like 6, 7, 8 years, where the majority of people have to wait until 65 or 70. So this is fascinating. So hope you guys enjoyed this video. Until next time, guys, take care.